Thank you so much, Chamberlain. Good morning, everyone. Welcome to Business Morning on Sunrise Daily. And yes, it's time to do a bit of business from all those very important state police talks and all of that. We start from the global space. Prices of oil edge higher on Tuesday after falling in the previous session as investors continue to assess the risk from geopolitical concerns in the Middle East. Now, let's start with the global benchmark, which is Brent, as usual. But, of course, this concerns Nigeria. This is what we have. Yesterday, it was at $86. This morning, it's gone up 0.23%. It seems that ease is beginning to reduce. So we see tension and the eyes more on the Middle East and all of those factors. So we see it at $87.27 a barrel. WTI follows way behind, though, 0.27% at $82.16 a barrel. And yes, we have the tensions between Israel and Iran driving prices. Investors are also looking at the U.S. GDP, that's the gross domestic product figures, and the March personal consumption expenditure figures, which is expected later on this week. Of course, we've talked about how interest rate cut is being delayed because of some of those numbers coming from the United States. Now, let's come to our own, the Naira. And, I mean, we're continuing this trend now since last week, going back into the red. And yesterday was a big fall for the Naira. We've been hovering around 1,100 yesterday. There was a deep fall, 5.51% in the NAFEM market. And we saw it going from 1,169 Naira 99 kobo to 1,234 Naira 49 kobo. NAFEX closed at 1,206 Naira 83 kobo. And this is in the official market. I think the parallel market is still doing around 1,100. Now, the interesting thing is you go back to the market, especially the electronics now, the guys are telling you that because of this, that has been happening since last week now, there's uncertainty. They may have to increase prices again. And so the issue of even Nigerians' reaction to the value of the Naira is also, a question that we should be asking ourselves as Nigeria. We'll talk about that later on. But first of all, I'd like to tell you that the Lagos Chamber of Commerce and Industry, along with other stakeholders in the rail sector, they paid a courtesy visit to the Vice President, Mr. Shatima, to share their perspective on macroeconomic issues as it borders on their operation as well as the impact of subsidy removal and ongoing reforms in the country. The president of LCCI, who led that delegation, Mr. Gabriel Dahosa, says that he believes that the meeting was fruitful because they shared some ideas with the vice president and with the promise of bringing these new ideas into the running of the economy.
The fundamental changes that have come with the removal of subsidy, the unification of the currency, has opened up a lot of opportunities, which we believe that the government can fast track with a couple of policies and measures that we have discussed with the Vice President, and we have profiled some solutions which can be implemented. And we have been assured by the Vice President that a couple of these are practical, they are doable, and he intends to consult with the President and work with us to chart the pace of implementation. The Vice President had assured us that we will continue this conversation on how best to implement these policies across various sectors of the economy: agriculture, oil and gas, manufacturing, and then the very important information and communication technology industry, which is creating a lot of jobs for young people.
So that's it. Another set of conversations. We had a lot of conversations, at the just concluded IMF spring meeting. We had the loan and, a lot of ideas, the one coming from the World Bank, the IMF, and even, among countries. But I guess, as one of the Sunrise Daily guests said, it's time to go away from just talking the talk to walking the talk. and we hope to see that really soon. Now, talking about walking the talk and the issue of the Naira now depreciating for more than a week now, let's find out what's going on with the manufacturers, the real sector right there. And joining us from the UK this morning is the Managing Director, Chief Executive Officer of Coleman Wires and Cable, Mr. George Onofowokon. Mr. Onofowokon, good morning, and thank you so much for your time this morning.
Good morning, Amy.
So we were celebrating the Naira. We saw it appreciating, went all the way from about 1,900 to 1,000 and I think 1,100 or less than that. Unfortunately now, it's about 1 week, we've started seeing it declining again. What is the rate from your own interaction? How has it been with you? Did you see a reduction? Because we're hoping to see commodities prices reduce, and now we see it declining again. So I don't know what to ask of you manufacturers, because you didn't even reduce the prices even when the Naira was gaining.
Point of correction, Amy, we actually did reduce the prices. From the perspective of the cable industry, I think we had a massive reduction in prices over the period, as we were able to see some interaction and see some replacement possibilities. So for us, we actually were reducing prices. Yes, I think the Naira did peak itself at about 980 at its most at NIFEX. Then it's also started devaluing again. The unfortunate part in everything is that when it devalued to its 1,900 mark, you saw the whole manufacturing sector literally go according to the pace of prices. Now, would price come down instantaneously? I don't think that would normally happen, because there would have been a buy, and of course you will have to have bought at certain prices. If you bought your material at 1,700, you're not going to sell it at 1,100. So it would have a cycle. The cycle invariably actually is the time it takes for the next buy to actually come in. Then you see it. It's normally about 60 days to 90 days of any cycle. You will see a price reduction from the impact of the appreciation of the Naira. Now, the unfortunate part, again, for most manufacturers is that they took a big hit last year during the devaluation. I think a lot of them are still dealing with their losses. It is not being fantastic as of yet. But what I think we would be seeing is that we'll be seeing some stabilization, rescheduling of debt positions to actually stabilize their positions and to actually be able to continue in business. Tightening as is happening, because of course we have to tighten everything to actually be able to balance this FX position. But in my own view, there's been not much gains for the manufacturer, because since the Naira appreciated, everybody has gone on a slow pace of buying, because now it's a question of when does the Naira reach its ultimate pricing. Now, so what happens is every buyer is literally waiting, and it's an unconscious attitude to actually just say, oh, maybe the Naira appreciates tomorrow, it appreciates next tomorrow, I wait. And so it's not been a good rebound for the manufacturers in sincere terms, because it's meant that everybody's expecting a price reduction, and for that reason they're not making purchases as they should. So our business is not doing as well as it should do. But a rebound now, which is still not good for us anyway, is actually making people rethink where the minimum level or where the pricing level of Naira should be. And the purchases have started again. But for me, the inconsistency, and I think it's not helping matters, but I think we're on the right track. I think what is happening today, for me, my own impression, is speculation. Now, one or two information came out in the market, Bloomberg information about the depleting foreign reserves, but that really, I think, has messed up a lot of things, because people misconstrue information. Because you can use your reserves to pay your debt. It doesn't mean you used it for actually FX payments. Now, a lot of things could have happened in the last 1-2 weeks. But invariably, the speculators have come in. Everybody is sitting down on their dollars, trying to see where the dollar plays. But I think people speculating will lose their money. I still see Naira as being undervalued. It's a waiting game. I've gambled on that waiting game, and we're right, 100% right. We had an exposure at the beginning of the year, and I rather took a LIBOR plus interest for the 5 months period, and we've come out smiling. Because for those that speculated that the Naira was 1,900, I literally didn't believe so, and we were right. Our buying price to me for the Naira is the lower 1,000, and I still see a currency appreciating greater than 1,000. So for me, from the manufacturer's point of view, we've lost a lot from the devaluation, but the recovery is possible. And I think we should not speculate or be speculating with anybody. It's not worth it.
Well, from your perspective, I mean, it's good to hear that optimism coming from a manufacturer in the country. That, you know, it is a good thing, and a good thing that should be spread. But when we look at the reality, because I've spoken to some economists about why they think the Naira is depreciating now, and I think you alluded to it when you said that, you know, a lot of people just withheld their demand when the Naira started appreciating, and now it seems the demand for FX is coming back, and that's why we see the Naira. But what do you see as a turning point to this? We've had the CBN intervene in the market, which is why we had the story about the reserve dwindling. You know, what do you see as a turning point at this point where we see the Naira depreciating again?
Turning point where we are reaching the turning point. If you look at yesterday's market, we're about 1,280 parallel. Now, NYFEX was having its own blips up and down, but today we've seen a movement down to about 1,250, 1,230. And I think it's appreciating itself back again. Now, for me, it is still a blip. It's not a bubble. Now, if you look at our situation, they've done the right thing. Short-term fixes have been there. You've tightened. You've introduced a lot of FPI, foreign portfolio investments have come in, bringing in more dollars. And look at it, the direction of bond sales has been towards the actual foreign portfolio investors rather than local. And you are getting it. Yes, the interest rate is coming down to about 20%, but it will not take a bit out. And when you look at it from the economic side, I think what people deluded, if you look at from the treasury side, what took money out in the last 1-2 weeks was FPIs, really, and it was crystallized FPIs, which were taking their money, which is normal. But it's only a blip for a short period of time where foreign portfolio investors take their investment, they come back in again. I don't think that is an unnecessary reason for us to panic. That to me, because I also did the research into why were we seeing so quick an impact. And from the Treasury perspective, some of the guys I spoke to in Treasury, it was a lot of foreign portfolio investors taking their money out. Now, they would take a big chunk of money, but it would also, once they finished, it will stop. Now, the major difference between Nigeria today and our FX position today is that we're not having that fear factor pricing is going. Now, the bigger problem we have is two different pricing is into the Naira pricing. Is the fear, which is priced in, the speculators, which is priced in. Take us the fear and the speculators, you find the real value of the Naira.
What's the real value of the Naira? What's the real value of the Naira from your perspective now?
For me, today, as of today, it's ranging between the 950 and the 1,050. That's my range now. So it should not be trading more than that. Anything greater than that is speculative. You're going to just lose your money. At the end of the day, you're going to make more money for the government anyway. They're going to end up trading, wait for you to actually trade high, bring their dollars in, make their money out of you, and come back into the market at a lower rate. So that to me is where we are now. On the long term, on the near term, if you look at end of the year, that Naira is definitely going to be below 800 to about 900. And for me, next year, we're going to have a currency trading end of next year between 600 and about, I just have brushed it over that. The main thing is that the short-term fixes are the interest rate, the FPIs. The long-term fixes are your FIDs on your oil and gas. You have Bonga coming up, $5 billion. You've got quite a few oil and gas related projects coming on board. which now they're unbundling, which is different from what we used to do. So you have a short-term fix by tightening the economy. You have a long-term fix by making sure other income comes in apart from your oil. So you need investment from FPIs, especially from oil and gas, which the figures are far bigger than you have Train 8 on the table. So when you look at the portfolios that we have related to oil and gas in Nigeria now that are going to be FID'd within Q3, Q4, and next year, you're talking in excess of 30 to 50, $60 billion on the table. And I think we have to see that these guys are not shying away from making sure those FIDs happen. And in the last discussion I had with someone in the oil and gas, we were talking Train 8. They're looking at a Train 8 already being FID'd by Q1 of 2026. So the difference now is that it seems Nigeria is in for business rather than in for speculative business. But now that would change the trend, strengthen it. Then finally, if you look at what else will strengthen the Naira. Now, we're a country that is so dependent on importation of petrol and diesel. And to me, that just doesn't make sense. Now, let's actually manufacture. You've got Port Harcourt refinery, which I still think is about 3-4 months away from giving you that 60,000 barrels a day. You've got your Warri refinery, which is under full reconstruction. Also, you've got your Cardinal refinery, which all will come most likely upstream by 2025, 2026. Now, you take your Dangote refinery, which in my own figures most likely will come properly upstream by end of the year, beginning of next year, where you can actually see both the diesel and the petrol coming out by next year, 2025. You take that into account, you'll be net positive of your oil positions in terms of petrol and diesel as of that time, which means we should not be importing any petrol or diesel by the end of 2025. We should not have any reason to. You take that out of the scope, you're taking $7 to $8 billion out of your foreign exchange needs. And then if they all keep on going as they should by 2026, you should be positive. I should not see Nigeria processing less than 700,000-800,000 barrels a day.
Mr. Nafoka, what about your sectors? What about manufacturers? Have you increased your export in the real sector, manufacturers? Because that's also a sustainable way to keep appreciating.
But the first question would be, what's the local demand? I think we keep getting this export thing imbalance. If an exporter, yes, you have some level of export in Nigeria. The biggest losers a bit on this thing will be the exporters with the Naira appreciation. But the biggest gainers will be the local players also. But it can be both-sided. Now, what I mean by that is fiscal policies must balance what they're trying to do. You're going to get a stronger Naira. Now, a stronger Naira might mean a weaker export. Now, you then really need to get your fiscal policy right to make sure that you're enabling the exports to still continue to happen, whereby you're turning your country to a processing zone. Now, which means I need to be able to get in as much raw materials as possible at the lowest possible price and process and sell added value back outside. Now, I am into the business of export, also not local. But I need to actually see that there will be benefits to the manufacturers in the sense of fiscal policy reforms that would enable that. And I think we're already playing that direction with some of the things, the policies that man is also pushing with the government to try and get that right. But immediate term is that we need to actually be able to bring people back into business. And for a manufacturer's perspective, I'd rather have a stronger Naira than a weaker Naira.
All right.
It would not be in the perspective good for any manufacturer locally because their raw materials is still being imported.
Exactly.
So if you're going to, it will end up causing costs to any individual or to its customers or to its consumers. Because if you have a very devalued Naira that is very low, you're going to have high prices, you're going to have inflation.
Yeah,
so those will be the back end of it.
Of all of that.
Thank you. As a manufacturer, we need the strength.
All right. Thank you so much, Mr. Nafoka, Managing Director of Coleman Wires and Cables, for your perspective this morning.
Thank you very much for having me.
All right, let's take a break now. When we come back, we'll find out how all of this is affecting commodities. Plus, I think it's harvest season and all of that. See, the bag of rice is reducing. Good news. We hope that's sustained. Let's talk about that after the break. Stay with us. It's commodities time now. We're having that conversation with Dr. Adesola Sumoni. He is a senior associate with financial derivatives company. Hi, Dr. Sumoni. Thank you so much for your time. So we're just talking about the Naira, which we saw depreciating on yesterday, 2.61% right there, one of the market. But let's see how. Yeah, so this is it. We saw that on NAFEM, it depreciated about 5%. NAFEX, it depreciated 2.82%. So we're talking to a manufacturer, and we see how this affects, of course, the cost of goods and all of that. We're talking about the commodities, domestic commodities, and I think it's harvest season and all of that. How do we relate the dropping Naira at this time, and domestic commodities?
Thank you for that question, Amy. I think it's been nice to start with why are we seeing the Naira drop so sharply, and then what can be done about it, and then we look at how it affects domestic commodities markets. So let me start by citing or quoting the central bank governor at the World Bank IMF meetings last week. He said that what they're doing currently in the foreign exchange market is willing buyer, willing seller, and price discovery, right? And what has happened is, together with some interventions in the market, we saw the Naira appreciate this month. As a matter of fact, the Naira was, I think, the best performing currency globally in April, appreciating, I think, around 60% year to date. Not 23%, I beg your pardon, year to date. But what has happened is, as the Naira appreciated more and more, it came within the willingness to pay of more and more buyers. So more and more people were willing to pay, say, 1,200, 1,100 Naira for $1 compared to when it was, I think, 1,600. So we saw a lot of latent demand get into the market. And since it is a free buyer, free seller, willing buyer, willing seller, I beg your pardon, what happened was the demand significantly outweighed the supply, and that's why we saw the exchange rates depreciate quite sharply, because more and more people are willing to pay 1,200, 1,100, and that significantly increased the demand. Also, as we are moving to May, we are seeing demand for summer travel. We are seeing demand for health, tourism. We are seeing demand for school fees for many people who have their children in the United States. They're going to have to pay for school fees. We are seeing demand for summer graduation travel in much of the Northern Hemisphere. Graduations are around this time. So that is part of why we are seeing such a sharp depreciation in the Naira. And what we need now is fresh money, because if you look at our FX inflows, particularly coming from the oil sector, many of it is already encumbered. Like many of the receipts from oil have already been committed, and so we do not receive the full inflows. In addition to that, we need fresh money. We need foreign portfolio investment. Just last week, I think we saw around 600 million come into the economy in terms of FPI. If you look at the stop rate of OMA and Treasury bills, they're around 20% for 365-day bills, which they're tracking the monetary policy rates, which is currently at 24%, and that is kind of attracting our foreign portfolio investors into the country. We need new money also in terms of discussion with multilaterals. Just last week at the spring meetings, the Minister of Finance, Mr. Wale Edun, confirmed that they are receiving a World Bank loan, I think, of about $2.2 billion US. That's, which I think at a 1% interest rate for a period of 40 years. I think that's really, really good. That would boost the supply of FX into the market. And finally, we need a discussion with creditors, particularly the Eurobond market. I think Nigeria may go to the Eurobond market to raise some FX, to kind of, essentially what we want to do is to boost liquidity in the foreign exchange market, so that the market is liquid, and so that we can have price discovery at a reasonable rate.
So how do we connect all of this to the planting season, which the country is at, that's Nigeria, I know you're in the UK at this time, and prices, we've seen, for instance, last week we did celebrate the drop in the price of rice. I hope that doesn't trend up again. How do we connect both?
I think first you need to look at the commodities that have import content. For commodities that are heavily import content, I think over time, as we see the currency appreciate, over time, that will translate into the price of these commodities. Because remember, many of these commodities were purchased when the currency was the exchange rate was still high, for lack of a better word. And so many of these stock need to be sold off before we then begin to see the effect of the lower prices. Before we begin to see the effect of the stronger exchange rates on domestic price. If you look at the price of rice, for example, it is down, I think, 7% month on month. A 50 kg bag of rice to 88,000 naira. Look at flour, is also down around 8% month on month to 59,000 naira. And if you look at sugar as well, also down, I think, 6% month on month to 80,000 naira. These are all 50 kg bags. But when you look at commodities, agricultural commodities, particularly these commodities they are usually scarce during the planting season, and we see the prices of these commodities trending upwards. Look at the prices of tomatoes, peppers, both are up. That is the basket of tomatoes and basket of pepper. Both are up 16-18%. For tomatoes, 16% to 35,000 naira, and for peppers, 18% up month on month to 100,000 naira. If you look at the price of beans, also is up 12% month on month to 90,000 naira. This is a 50 kg bag of beans. If you look at plantain, a bunch of plantain is also up around 28% to 4,500, and the new yam, medium size new yam, is also up around 40% to 10,500 naira. So because of during planting season, it is during planting season we usually have scarcity of these commodities, and so we are seeing the prices of these agricultural commodities trend upwards. But for the other import elastic commodities, we see that as the exchange rate is strengthening, we are seeing some of those translate into the prices of these commodities, and they are coming downwards.
Rice, I know a lot of it is imported. Perhaps that's why the price is trending downwards. Is that sustainable?
Indeed, I believe that the exchange rate will continue strengthening. I believe that the central bank governor, they are doing, this current team, they are doing the right thing. And I believe with that, as well as with improving the business environment, which will further improve or increase the inflows of foreign direct investments into the economy, which is very, very important, which the previous speaker really alluded to. I think that would help strengthen the Naira. And if that continues, then we'll begin to see further strengthening. We'll begin to see the prices of these commodities trend downwards further.
All right. Thank you so much, Dr. Adesola Sumoni, Senior Associate with Financial Derivatives Company.
Thank you for having me.
I have to go on another break. When we come back, we'll do a bit of the markets before we head back to the Sunrise Daily Studios. So stay with us. Well, that's about all we can take. But before, of course, we head back to Sunrise Daily, I'll just inform you that the market recovered. The NGX recovered yesterday, 0.13% at 99,665. There you have right there, market cap, even though it's still at 56 trillion naira, gained 71 trillion naira. Activity was mixed yesterday, and sectors were also mixed. But we'll get more market details, fresh numbers at 1 p.m. You don't want to miss Business Incorporated. Ladi Williams will be here to give you that. But now let's head back to the Sunrise Daily Studios. Back to you guys.